Have you ever wondered how the wealthy keep getting wealthier? It's a question that piques curiosity, isn't it? We see the opulent lifestyles, the luxury cars, the sprawling estates, and we can't help but wonder, what's their secret? Well, today we're going to pull back the curtain and reveal the playbook of the wealthy. You see, the rich don't just work for their money, they make their money work for them. And how do they do that? By investing in assets, but not just any assets. There are certain types of assets that the wealthy favor more than others, 10 to be exact. And these are the assets we're going to explore today. From real estate to stocks, from gold to vintage cars, these are the investments that have helped to build and sustain fortunes across generations. So, without further ado, let's delve into the world of a fictional wealthy investor, Mr. Goldstein, to understand this better. Mr. Goldstein's first love is real estate. This is where his journey to wealth began, and it's a path he continues to tread with unwavering passion. His portfolio is a diverse mix of both residential and commercial properties, a strategic move that allows him to tap into different markets simultaneously. He doesn't just buy any property though. He meticulously chooses ones with high potential for appreciation, located in flourishing neighborhoods or commercial hubs that attract a steady stream of tenants. These properties are not just assets. They're income-generating machines that keep his wealth snowballing. He also leverages the power of real estate investment trusts, or REITs, to diversify his holdings further. This way, he enjoys the benefits of owning properties without the hassles of day-to-day management. It's a game of patience, expertise, and strategic decision-making. But with each passing year, the value of his real estate holdings grows, contributing significantly to his ever-expanding wealth. Real estate, for Mr. Goldstein, is the cornerstone of his investment portfolio. Next in line in Mr. Goldstein's portfolio are stocks. Now, stocks are a classic choice for investors, and Mr. Goldstein is no exception. He is a firm believer in the power of blue-chip companies. These are large, well-established, and financially sound companies with a history of reliable performance. Mr. Goldstein often leans towards companies that have demonstrated their stability over the years, companies that have weathered economic downturns and still come out on top. He's especially keen on those that pay dividends, giving him a steady stream of income while he waits for the stock price to appreciate. His strategy is simple: buy and hold. He purchases shares in these blue-chip companies and holds on to them for the long haul. This approach has rewarded him handsomely over the years, with impressive returns that have significantly grown his wealth. For Mr. Goldstein, stocks are the spice that adds flavor to his investment portfolio. Bonds, the safe harbor, also find a place in Mr. Goldstein's portfolio. Consider bonds as the calm, reliable friend who's always there. You won't see them making headlines with flashy moves, but their steady presence is reassuring. Mr. Goldstein knows this. He understands that in the diverse world of investing, bonds are the safety net. When stocks are on a roller coaster ride, bonds offer stability. They provide regular interest payments, which Mr. Goldstein appreciates as a consistent income stream. This is especially valuable in times of economic uncertainty, when other investments might be wavering. Remember, bonds are essentially loans that investors, like Mr. Goldstein, give to entities like corporations or governments. These entities promise to pay back the loan with interest over a fixed period, and while they might not have the potential for skyrocketing returns like some investments, they offer something equally important: security. Bonds, for Mr. Goldstein, are the anchors that keep his ship steady in turbulent waters. Mutual funds and ETFs are the workhorses of Mr. Goldstein's investment portfolio. They are the all-rounders, offering a mix of stocks, bonds, and other assets, providing a buffet of investment opportunities. By investing in these, Mr. Goldstein taps into the power of diversification. A mutual fund, for instance, pools money from multiple investors to invest in a variety of securities. This allows Mr. Goldstein to own a slice of a larger pie, spreading his risks across multiple sectors and companies. Similarly, exchange-traded funds, or ETFs, trade like stocks on the exchange, but offer the benefits of an index fund. They track a specific index, sector, commodity, or asset class, granting Mr. Goldstein access to a wide array of investments through a single transaction. These assets, mutual funds and ETFs, are the steady performers, delivering consistent returns over time. They ensure that Mr. Goldstein's wealth is not concentrated in a single area and continues to grow. Gold and silver, the timeless treasures, also find a place in Mr. Goldstein's portfolio. These precious metals are not merely shiny baubles to adorn the necks and wrists of the affluent. No, they serve a much greater purpose in the grand scheme of wealth preservation. You see, Mr. Goldstein understands that the world's economies are a turbulent sea, prone to the waves of inflation. And what better way to weather these financial storms than to anchor his wealth in the solid ground of gold and silver? These metals are renowned for their ability to maintain value over time, even when paper currencies falter. Mr. Goldstein doesn't view gold and silver as a path to instant riches. Instead, he sees them as a hedge, a kind of insurance policy against the unpredictable nature of inflation. It's a strategic move, one that underscores the importance of diversification in any investment portfolio. Gold and silver, for Mr. Goldstein, are the shields that protect his wealth from the ravages of inflation. In the digital age, Mr. Goldstein doesn't shy away from cryptocurrency. Indeed, he embraces it. Just as a garden flourishes with a variety of plants, so does a portfolio with a diverse array of assets. And in the digital garden of wealth, cryptocurrency is the intriguing orchid, beautiful and unpredictable. Mr. Goldstein, like many of his affluent peers, sees the potential in this digital asset. He allocates a small portion of his wealth to cryptocurrencies, not as a gamble, but as a calculated risk. He understands that the volatility of cryptocurrencies can be high, but so too can be the returns. He doesn't bet the farm on Bitcoin or Ethereum, but he stakes a claim, a foothold in the digital frontier. He appreciates the potential of blockchain technology and the financial revolution it could bring. And so he invests, he waits, he watches. Cryptocurrency, for Mr. Goldstein, is the wild card that could yield high returns. Finally, art and vintage cars, the luxuries, also form part of Mr. Goldstein's investments. But these aren't just pretty pieces to show off at parties. No, they are strategic assets, carefully selected for their potential to appreciate over time. Mr. Goldstein's art collection, for instance, is a testament to his discerning eye. Every canvas, every sculpture, every piece of art is an investment that is expected to increase in value. The art world can be volatile, but with the right knowledge and connections, it can also yield substantial returns. The same goes for vintage cars. Mr. Goldstein's garage houses classics that are more than mere vehicles. They are pieces of history, meticulously maintained and restored. Over time, their value only goes up, especially those of rare models or those with a fascinating backstory. Art and vintage cars, for Mr. Goldstein, are the cherries on top of his investment portfolio. They're not just investments, they're passions that also happen to bring in a tidy profit. So, what can we learn from Mr. Goldstein's playbook? In our exploration of the wealthy's investment strategies, we've unpacked a trove of valuable insights. We've discovered that the rich don't put all their eggs in one basket. Instead, their portfolios are as diverse as they are dynamic, a testament to their savvy approach to wealth creation. First, we delved into the realm of real estate, a tried-and-true asset class that's been a cornerstone of wealth for centuries. From rental properties to commercial real estate, the rich know that investing in bricks and mortar can offer both steady income and long-term growth. Then, we explored the stock market, a playground for the wealthy. With a keen eye for opportunities and a solid understanding of market trends, they strategically buy shares in companies, banking on their growth or consistent dividends. We also touched on bonds, those reliable, albeit less glamorous investment instruments. Bonds offer a steady stream of income and a safety net during market downturns, making them a crucial part of any diversified portfolio. Next, we ventured into the world of mutual funds and ETFs. These investment vehicles allow the wealthy to spread their risk across a basket of stocks or bonds, offering a balance of risk and reward. Gold and silver, those ancient stores of value, also found a spot in our discussion. These precious metals act as a hedge against inflation and market volatility, a safety net that the wealthy find indispensable. Cryptocurrency, the new kid on the block, has also caught the attention of the affluent. Despite its volatility, the potential for high returns makes it an attractive addition to their investment mix. And let's not forget art and vintage cars, those unconventional yet lucrative assets. The wealthy appreciate that these unique investments not only offer financial returns but also cultural and aesthetic value. The playbook of the wealthy is open for all to see. The question is, are you ready to play the game?